Sometimes the most accomplished investors and developers thrive while keeping a relatively low public profile. That's clearly true of the Fallon Company. For nearly 20 years, the Boston-based firm has been the driving force behind Fan Pier, the 3 million square foot development on Boston Harbor that ranks among the most significant urban placemaking initiatives of the past couple of decades. Hello, and welcome back to Investment Matters. I'm Paul Rosta. My guest for this episode is Michael Fallon, the firm's CEO and the successor to Joe Fallon, the company's founder and Mike's dad. In a way, this conversation brings me full circle. When I first started covering real estate, the reinvention of Fan Pier was in its earliest stages, and Joe Fallon was one of the first industry CEOs I had the opportunity to sit down with. 2 decades later, Joe has moved into a new role as chairman. His son Mike has taken on the CEO responsibilities, and the epic redevelopment of Fan Pier is nearing completion. In this conversation, you'll also hear about the pivotal experience Mike gained from working in another industry, the new markets that he views as promising, and the company initiative that opens doors to real estate careers for local young people. Take a listen. Michael Fallon, welcome to Investment Matters. It's great to be with you today. Thanks for making some time.
Paul, excited to be here. Thank you.
For the benefit of our audience who may still be new to the Fallon Company, would you mind giving us just a quick historical overview, just for a kind of a little introduction? I mean, you've been a prolific developer for more than 30 years, but tell us a little bit more about the company.
Absolutely. So the Fallon Company was founded by Joe Fallon, my dad, about 30 years ago. And he came from a development background, started doing projects on his own as the sponsor, general partner, and started primarily in the seaport of Boston. So that was in, 94, 95, 96. He was doing ground leases and building apartments. And over the course of the last 30 years, we've been fortunate. We've done about $6 billion worth of work, pipeline of about $5 billion going forward, and been fortunate to capture a bit of that seaport Boston magic, where that area has expanded over from 2005 really to call it 2025. The last 20 years, it's become quite a destination from parking lots.
Well, as you mentioned, it's been a very active 20 years or so. And one of the Fallon Company's most, maybe your signature project, in fact, if that's fair to say, is the redevelopment of Fan Pier, which really does rank as one of the most significant placemaking projects in the U.S. over the past couple of decades. And just as an overview, I want to hear more about some of the highlights and milestones. But can you tell us a little bit about the overall significance of Fan Pier for Boston and the Boston waterfront?
Absolutely. I think it's completely fair to call Fan Pier to date the most significant. I think we'll talk about it later, but I'd say our Nashville East Bank project, which is 30 acres in Nashville, will be another one with a lot of similarities. But Fan Pier, I wasn't with the company at the time, but I was very much in and around with Joe, with Dad, as he did it. 2005, bought Fan Pier from Nick Pritzker, and it is a $4 billion, 21-acre mixed-use center with the first major life science deal that was done in the seaport in Boston, certainly, and largely speaking in Boston at the time, which was Vertex Pharmaceuticals, and that was in 2011. So over the course of Fan Pier, there was the great financial crisis. That was the GFC in 2008. There was, I'd say, a lack of investment from others for those first few years in the seaport. So it was a bit of a loner. And ultimately, I think it transformed or catalyzed some of the innovation district policy prescriptions and planning decisions by the city of Boston, which the idea was to create this urban neighborhood, newer. Boston's a very historic city, and to capitalize on the Big Dig, which had the Mass Pike, which is I-90, I-93, and transportation and proximity to the airport. So all of those things came together to have the location make a lot of sense. But as you know, when you're looking at a satellite image of a site, it can make all the sense in the world, but the timing and everything else matters so much.
I'd like to hear more about a couple of the milestones, such as the completion of One Marina Park Drive, which was in 2010, and that what was the significance of that in the overall program?
Absolutely critical. So that was the first mover. And the thinking at the time was that, well, Fan Pier is among the sea of parking lots, not, 50, 70 acres of parking lots, and Fan Pier being, 20 plus or minus acres of that. The people needed to understand that this was a place that was going to happen. There were doubts that the seaport would evolve in a reasonable time period. I think everyone understood eventually. So it required Joe and Mass Mutual, Cornerstone at the time, now Bearings, to take a big gamble, and that was on putting an office product in an area basically desolate, to create the momentum. And you had to think of it as this will be the lost leader, but it'll establish the place. And that's a very challenging thing for an investor to do. And I give Mass Mutual a lot of credit for seeing the vision there. That was in 2010 that building came online. And, as you might imagine, coming out of the GFC right in 08, 09, 10, that was a very challenging time. There were things that Joe did that helped to shift the public perception of the area. A lot of events and marketing and hosting big events, getting people to the site. One major milestone was bringing in Mass Challenge, which is a very successful incubator in Massachusetts for startups. But all of that, having that first mover, then led to the rest, which was Vertex and the condos and all of that.
And I'll stop you right there because that was a major landmark situation that we covered in CPE back in the day. But tell us a little bit about the Vertex headquarters lease decision and what that meant for the overall program, for life science in the region, and for Fan Pier.
Vertex was it's hard to understate how important that was. But let's remember at the time, Vertex's stock was in the low teens. They didn't have a marketable drug yet, and this was still a huge gamble for Joe and Mass Mutual. Now there was a deal done or almost done in place prior to us commencing construction in 2011, but that was being syndicated by Goldman and Lehman in 08. And as you might imagine, I mean, it completely shifted the landscape. Lehman went under, the bank stopped lending, so that deal went away. But Vertex did come back, and there we had to work through quite a few things to make sure that we were providing the services they needed, daycare. They wanted a Starbucks, things like that. But Vertex was on the cusp of making some pretty important discoveries, and they were in FDA approval. So that was about a 1.1 million square foot project. They were the first big mover to come out of Cambridge and into Boston, which at the time was, as far as I'm aware, the largest commercial lease in Boston's history. I don't know of a larger one, but I'll just say it then. To the best of my knowledge, the largest. And I'll just add, Paul, they brought 3,000 jobs to the area. It contributed to a huge influx of not only tech companies, but service companies following Vertex and other pharmaceuticals into the area. Now we have BCG, Price Waterhouse, all of these different tenants.
Mm-hmm. And ultimately, if I remember correctly, that the joint venture was able to sell that property. Is that right?
That's right. It was sold to, in I believe 2014, to SNH, which is affiliated with RMR,
Mm-hmm.
and they bought that asset. I believe they recently re-signed Vertex to an extension as well.
Mm-hmm. And that was a pretty big deal too, wasn't it? That
Oh,
acquisition.
incredibly meaningful. I mean, my dad Joe is he's an entrepreneur's entrepreneur, so he would always, new projects. He had done the 400 and some odd unit apartments in Seaport, then the Renaissance Hotel, then the Westin Hotel, and consecutively just doubled down. So he was our equity pieces that we put in are larger than the typical. So having the Vertex exit opened up a whole host of other opportunities for the company, which ultimately led to us expanding geographically into Charlotte, then Raleigh, and now Nashville.
Before we leave Fan Pier and the Boston waterfront, I wanted to mention to our audience that it continues to be a workshop for innovation, and in a kind of an unusual way. As I understand it, Boston recently became the first city in the US to implement a technology called living seawall,
Yeah,
which takes the traditional protective seawall, adds design features that are inviting to marine life. Could you tell us a little bit about how Fan Pier became part of this initiative and why it's important for the harbor?
it's well, Fan Pier became part of the initiative because of our activation with the waterfront. So we're very involved with all the different organizations and nonprofits
Mhm.
that are working on new solutions for not only coastal resiliency but biodiversity. And how are we the built environment and all of these new products along, let's just say Boston Harbor, which is it's a remarkable harbor, right? That you have a tide that'll be up to 9, 10 feet that's going in and out. You've got a ton of different sea life, and then you've got these temperature changes, right, from winter to summer. And so there's a huge amount of different things that are living in the ocean that as we build and we drive piers and piles and um, as we polluted but now cleaned up to one of the cleanest urban harbors in the country, what we're trying to do is explore ways to bring back some of that ecological biodiversity. And but it's not easy. It's the words aren't even easy to say, right? So
Hmm.
when people will come to us with ideas, it's about being willing to maybe step up, put some money up, and try to be a part of the idea. The Living Seawall project, that's it's led by a company called Stone Living Lab, and we're one of the site partners for the pilot of it, and it's effectively these panels and nets, right, that'll allow different crustaceans or different whether it's crabs, crustaceans, things like that to live on them. And they do a whole host of different things, right? They'll help clean the water, they'll help do more in the water, but it's also based on how do we increase the resilience against climate change, because these animals and this technology coupled with um, berms and seawalls can do something about flooding.
And right now, do you have anything else going on right now on the Boston waterfront? We have some residential projects on the way,
Yeah,
and
I'm very proud of that one because we actually have two projects, one in Charlotte, one in Boston, that are underway. And as you know, very few people are getting things financed. So I'm extremely proud of the team that we got these financed. Bank of the Ozarks came, stepped up, and Mass Mutual Bearings stepped up in Boston to do. It's about 120 to 130 condominium units. That is the ninth parcel, the final building at Fan Pier. So it's bittersweet, but I know for Joe and Richard Martini and Jimmy Heighton, who've been on Fan Pier since '05, I don't know that they thought it would be 20 years. So I think they're pretty
hmm.
excited to have the culmination.
Yeah, Mike, what does it take to get something like that financed these days in what's still a pretty tight capital market situation?
It's funny, right? You'll have these conversations, and the past 2 or 3 years, it's been more challenging, to say the least, especially for product in the gateway cities where you've had post COVID. What is life going to be like? So first off, we've had this land for some time. So I would say we had a better land basis and we have some infrastructure built out, which helps. The
Hmm.
product that we're building is it's the high end condominium market, and we've had great success on two of our other buildings. So there's a bit of I would say, a following now for the product that we're making. Ultimately, we have a partner in Mass Mutual who gets the program and agrees with the program, which is We think the product is going to sell. There won't be a whole lot delivering. So let's be that one building, out of a few that's delivering with this new product. I can tell you, Paul, that the terms, they're worse than they were, but I give a lot of credit to Ozark and Mass Mutual for recognizing the environment, being realistic, and getting deals done.
Well, let's talk about one rising market where Fallon is focusing right now outside of Boston. You've got some big plans for Nashville. And first of all, what is it that you find attractive about the city at this time?
We actually started into Nashville. So we did Charlotte in 2016, Raleigh in 18, and then Nashville was 2019. And we were looking for urban areas that were exhibiting uh, those signs of growth that now everyone thinks about, but we were thinking about in 2016, which is infrastructure investment, political climate that's pro business, pro investment, um, temperate climate. Climate's not necessarily climate change, but just climate's an issue. Quality of life and cost of living. Um, those drivers, among others, led us to want to make an investment in Nashville. We broke into Nashville in 2019, working on an RFP that the Tennessee Titans had put out, which ultimately changed to an RFP that the city, Metro Nashville, put out. And that was for 30 acres, which, as you know, those don't come up often. I mean, you're talking about a very small handful of properties. It's a public-private partnership. We were fortunate to be awarded just over a year ago now. We signed the deal, and we'll be building 30 acres. That's it's going to be north of 10 buildings, whether it's 10 to 14, remains to be seen, and a mix of uses. An important thing, Paul, all of this is adjacent to the new $2.3 billion Tennessee Titans enclosed stadium. And that is a thesis we believe in, not only for the NFL event days, which will be there, but in Nashville, there is a host, there are so many opportunities to have other stadium event days there for concerts and conferences and things like that, which we think we can capitalize on.
How do you think that your long experience with Fan Pier will inform your strategy for the build out in Nashville?
There are some things that are always the same and some things that we have to
Hmm.
rethink. So as a strategy and as a core value of the company, making sure that we're very focused on timing and flexible. So we need to match the market at certain times. I know that we talked about One Marina Park Drive and how the market wasn't there. Um, that works once or twice, then you're rolling the dice a lot. So for us, it's what are the first few products that we're going to put up? How do those set the tone for the development, just like we did at Fan Pier? And then what were the things that worked really well at Fan Pier? For example, open space. We're planning to have, it would be 20 acres ish of parkland and green space that will be in that environment. Not all of it on our 30 acres that we're building, but throughout that master plan. Focusing on the retail, everyone says it. A friend of mine recently posted something on LinkedIn. I think he put it perfectly. He said the first 20 feet makes the next 200 feet of a building.
Hmm.
It couldn't be more right. And how do you actually achieve that? You have to give retailers reasons, financial and otherwise, to be there. And that means maybe you're subsidizing those first few deals. Maybe you're doing percentage gross deals. Maybe you are curating the retailer, bringing in a partner in such a way that you're going to have to adjust expectations on other aspects of the project.
Mhm.
So the retail, the open space, the proximity to the water is one other component. This site is right along the Cumberland River in Nashville. And because the Cumberland River was historically used for, and still used, primarily for shipping, there's very little recreational boating of any kind. The the way that the bank of the river was built was with these piers for loading and offloading and then warehouses. So everything's raised up. So there's very little that is, at least on the city side, that makes you feel connected to the water. I just believe I don't have data to support it besides anecdotal data that people want to be around water. It's a feature. It's like a fire pit or a water fountain. So there are going to be some excellent opportunities to incorporate the water into the site, and the Cumberland River just vastly underutilized and has so much potential.
Well, I'd also like to give a couple of the other markets that you mentioned their due. What are you focusing on right now in Charlotte and Raleigh?
So Raleigh, we actually perfect timing. Last week, our Raleigh office building, which is the headquarters for Pendo, which we completed during COVID, actually, and that was a wild time doing an office building. That just got the uh, Toby, the outstanding building of the year in the market for the second year, and
Oh.
they call it the Grand Master Award, which is highest overall in every category. So I'm really excited about that. That just speaks to the development team and the designers.
Mhm.
So we have one other parcel there, which is in on the corner of which is right on Hillsborough Street in downtown Raleigh. That other parcel will be an apartment tower, and then there's the existing office. In Charlotte, we own an office building in Midtown. We're working on a 16-acre joint venture with the Charlotte Housing Authority that will have over 700 units of uh, uh, housing, mixed income housing, approximately 140 units of income restricted housing,
Mhm.
and an office component over 300,000 feet, about 180 key hotel, and park space as well. And our second project that we just broke ground on, Paul, which is excellent. Again, very few projects breaking ground. We just broke ground on a project. It's about $100 million apartment project in an area of Charlotte called Cotswold, which is right near South Park. And that submarket hasn't had new development, apartment development in 20 plus years. So I don't know how many more sites there are. Therefore, I'm extremely excited about that one. We just we just had the ground, we just did the shovels and the pictures, and I've missed it. I love that.
Well, yeah, it's always fun to be on hand for the inaugural step, isn't it?
Yeah,
So, but you probably touched on one of the reasons that that's getting done right now, and it's just because of the dearth of development in that area. Was that kind of the key to getting this financed and on the way?
that was the key. You know, where I'm fortunate in that I'm able to lean on the track record of a great team and my father. Right, it's not just that he gave me the last name, but he gave me a great reputation to stand on the shoulders, so to speak. And sponsorship right now is extremely important. Availability for us to put our balance sheet behind a project is extremely important. Our partners on that Prudential, um, I consider one of the most blue chip there are, and Santander Bank. So those relationships are newer for us, and I'm hopeful that um, they're going to grow. I think everyone's looking for relationships that are more than just one off. What I can tell you is that the track record of success was certainly helpful. Our ability to put capital up was certainly helpful. But I think, you know, our pipeline that we have today is compelling, and particularly Nashville, Charlotte, and Raleigh, where I think people see room for growth. Additionally, we have two projects in Boston that we own. One in Sullivan Square in Boston. That would be about an 800,000 foot life science building, and then one across from the Museum of Fine Arts in Boston, which would be two life science buildings about 700,000 feet. So we've got land, we've got projects. We need the right partners to keep pushing forward.
Well, Mike, let's turn to your own professional journey here. Certainly you had experience, exposure, make that to commercial real estate through your family. But all that said, however, was it on your radar as a strong career option early on, or did it kind of evolve gradually over time? How did that all come about?
It's a good question. So first, I'll say my dad never pushed me into it. I was around him. We're just extremely close. So I was around him as a kid all the time. And whether it was with the car phones, in the car, hearing the speaker discussions, or um, being in the meetings playing a Game Boy, but you pick things up. And then in the summer, I think partially to keep me out of trouble, I'd be in the office, 3 or 4 days a week. He took me to Joseph Bank and bought me the suit, the two suits and the shirt to be in there. And I started working on projects. I was probably more of a pain than I was useful, but then I did undergrad, and I was international relations with a focus on economics, and I didn't know if it would be maybe law. I enjoyed debating, Model UN, things like that. But ultimately, my summer jobs were still construction and being on the site. And before you know it, without planning for it, I think being around an environment, you realize that relative to your peers, you've picked up more. And whether it's by osmosis, I mean, it's just being in the room, I suppose, you realize you have a bit of an edge. So relative to peers. So I went to work for Turner Construction out of school, and worked as a materials engineer, which really meant that I was being put into rooms I probably shouldn't have been in, with higher level folks talking about smart things, and trying to learn as much as I could. I was doing exterior curtain wall and fabrication, things like that. But I got to travel and see how construction worked. Um, I did that for about 2 years. Went to grad school for finance while I was working for my dad. And I wasn't thinking I was going to go into the business necessarily, but needed to work, and he let me do it part time. I was doing leasing and those type of projects. Then out of finance, when I got my master's in finance, I don't know if he planned this or not, but Joe said, "Hey, I've got there's a deal. There's a tenant wants to do something. Why don't you do this one on your own? Go not for the Fallon Company. I'll help you." He and I had already flipped a couple of buildings. So I said, "Great." Long story short, that deal didn't end up materializing. Before I know it, I'm in the office helping him. So uh, I then got my construction management master's in construction management in 16. And from there oversaw the expansion into the other markets. So Charlotte, Raleigh, Nashville, and then started getting into the leadership team, working through the transition in 2018. But I probably did too much school. But as the son, you're worried about not only perception, but you want to make sure you're earning it. Um, and part of that means being very valuable and trying to be knowledgeable and smart. So I really wanted to get to school almost as validation. But what I tell people is I think you lose the chip on your shoulder after you make a little bit of money on some deals. Then you realize that doesn't really matter.
Probably not every developer has hands-on experience in the construction industry as you do, and you have your degree in construction management. What has been the value of that experience in construction and that training in construction to you as a developer now?
Absolutely critical. I think it's a differentiator. So I'll often say we're builders, not bankers. Meaning that we're coming more from a construction background than a finance background. I love the mentality of construction folks, because a lot of times they're no BS. They're right to it. It's almost like you've heard Ray Dalio maybe talk about radical candor or whatever it is, but cutting right to it. Now, that's not the right attitude all the time, but construction folks are great typically at working problems. And as you know, with business, let's take a construction project, for example. When something comes up, you want that superintendent on the site who's been doing it for 40 years and knows, yeah, instead of ordering a new bolt, right? Give me the bolt, I'm going to hammer it a bunch of times and we're going to make it work, right? So it's about solving problems on the fly. And we believe in range. So there's actually a book called Range that I would encourage everyone to read. And it's about generalists and how valuable generalists are. And my belief is that in real estate development, you're kind of like the conductor, right? Trying to manage all of these different varied interests in to bring a project together. So having knowledge of all of them and being able to step in and step out is extraordinarily valuable because we're not a huge company for the amount of work we do. Um, I love to try to grow generalists in the company. I think they're very valuable, and I think you can take the best of pieces of all the different things that we do. Um, we're working on getting better with our ability to sell ourselves, do business development, and market ourselves. Uh, Dad's ethos was the spouted whale gets harpooned. He always would say that. And so he would say, keep a low profile, just execute and develop. And that works in Boston. But where people didn't know us in other markets, we had to learn how to tell the story. And part of the reason I'm here with you now is how do we tell the story in a way that's genuine but doesn't come across as completely self-serving? And we're working through trying to figure that out.
You've been discussing some of the elements that have factored into your experience and your outlook as a professional, as an executive in this industry. What would be your advice to younger people in college or grad school or even high school who may be considering a career in some aspect of commercial real estate, whether it's investment, development, finance, and any part of it? What would you say to them?
First off, I think that's a great thing to do. We have I know we'll talk about it, but one of the nonprofits that we work with is about engaging younger people in real estate development because renovating, buying, building homes, all of that is that's the foundation for neighborhood development, right? It happens on a micro scale. So I would say that's first off, that's great that there's an interest. Secondly, it doesn't mean that's where you're going because a lot of times you figure out what you don't like much quicker than you figure out what you do. So it's almost like you're trying to find a data cluster. I don't like this, I don't like this, and then you narrow it. Uh, the most important piece of real estate development, in my mind, the thing I most attribute to any success I have is being in the rooms and around people and listening. So if you can get yourself in the room, just be a fly on the wall, you're going to pick up so much. Um, I was just fortunate and I got born into a great situation where I was able to be around it. But I actually recently, now we have a advisory board and folks that mentor me besides my dad. I realized how much people want to help. And so in turn, I'm now working with a handful, quite a bit of the students, many of the students that were in our programs, but also folks that reach out. So I really try to reply to them and meet with them. People want to help, come in trying to provide value, and don't be too afraid of thinking you're bugging them, right? It's just everyone's busy. Try to get some attention from them. And then how can you add value? Don't come in with a question like, how did you get into real estate? Like for them to ask me if we have a half hour. Not that your question's not great because it is, because now we're talking about this. But I say to them, ask me what can I help you with today? Is it let's get this resume better? Who can you connect me with at CBRE? I want really actionable things for these folks because what if we don't see each other again? Let's make it valuable. So to recap, I would say get in the room, listen and be of value however you can, and try to seek out mentors because people want to help more than you think.
That makes a nice transition to discussing one of the Fallon Company's many contributions to that whole area, which is the Real Estate Youth Entrepreneurship Program. And this is an initiative that started in 2021, I believe.
Yeah.
And could you tell us a little bit about the mission of the program and what you're hoping to accomplish?
So I'll tell you, it's a great, it's more than great. It's such an impactful program. We've worked with over 80 kids now, and I have to give so much credit to some of our team, including let me shout out Danny Guadagnoli on our team and others. But Tavares Brewington is a gentleman that is a corporate counsel. He was a prosecutor, federal prosecutor prior, and he grew up um, literally on the streets. So that's why the program is called Street to Ivy. He ended up going to Holy Cross on a football scholarship and then went to Cornell for masters. And he is the co-founder of the program. Now he already had a program called Street to Ivy, but it was focused more on, I would say a variant of the entrepreneurship. What we said is we want to help get kids into real estate because at the time there was a deep concern, and although there still is, but there was a focus on investing in um, let's call it historically underutilized geographies with historically underrepresented developers, meaning minority developers, Black Americans, and others. And if you look at Boston, for example, you'll find areas where maybe transit isn't great, maybe the housing stock isn't great, and predominantly um, minority communities. And well, what we said was let's stop thinking about all of the reasons for it, right? Because there are a bunch of reasons, for it over the past 50 years with urban planning. How do we fix it? And we said, well, gosh, I'd say the people that are most able to understand the neighborhood dynamics and to figure out the best ways to invest are probably the people that live and grew up there. And we have to try to bolster folks to have the abilities to uh, recognize real estate opportunities and then go buy and renovate and create value. So it started with that thesis. We have grown the program over the years, adjusted it and adapted it every year to now it's about a 6-week program throughout the summer. The kids are coming 2 nights a week. They're, 3 hours plus each night. They're coming from all over. Some are taking the bus or the train, 2 hours. And it's open to anyone. You have to apply. And we teach everything from the basics of real estate and business fundamentals all the way up to they do a capstone project where they have to present to parents and friends and family and their classmates on a real estate investment and pitch us to invest. What we learned is that there are so many skills that we take for granted or I take for granted. So we'll start the class now by doing, okay, here's how you do a proper handshake. Walk up, firm handshake, look in the eye. Those kind of skills, you and I may have just picked that up along the way, but that's important. Um, we'll provide business cards. We'll provide different tools and books and things like that will make them valuable in environments at a real estate conference or something like that. And everything from Joe will often talk about, hey, I want you all to get a credit card. Here's what you're going to do. You're going to spend, $5 a month on it, like nothing more. And I want you to pay it off every month. And I want you to build credit, which, I mean, those are extremely important. So this program, over 80 kids, we're doing it every year, and it's wildly impactful when you see these kids, the progress they've made. They're just great, and the program's great.
Yeah, it really sounds like something that could serve as a model, that should serve as a model for communities around the country, really.
Couldn't agree more. I think and it's very scalable, right? So Tavares, a lot of this is the fact that Tavares is such a remarkable person. But this is scalable in the sense that once we format a curriculum and you have someone that the students can relate to and will hold them accountable and be a great, let's say leader in that market, then it's just about finding real estate and business professionals to come speak and teach the curriculum. So I'm very optimistic that it can grow.
It's really timely that we're having this conversation right now as we are looking ahead to the new year. What are your thoughts about 2025? What's on your radar? What are you most excited about? And also, what challenges do you see ahead for the business, for commercial real estate in 2025?
I think 2024, 2, 3, 4, as we've seen, cheap debt go away, has really cleared the deck. It's shaken the tree, so to speak, of developers. So the firms that are left, I think we will have a less crowded environment. So that's a good thing for us, provided that all the folks that have left are it's working out. Best of luck. I hope that works out. Going forward, we need transactions to pick up because we haven't figured out what that market clearing price is for different assets. Without transactions, we can't mark our books accurately. So it's very challenging to figure out what the value of anything is. As you saw the Fed rate cut a few days ago, and we're expecting 2 more in 2025. That's a whole other kettle of fish because, well, growth and other things and may drive inflation. But 25, broadly speaking, is going to be a better year for real estate. We're going to be capitalizing a couple of big projects, including some of those projects in Nashville, and we wouldn't be going out in the market unless we felt the timing was right. A couple of macro issues I'm looking at. We believe in density, so that means we're believing in downtowns. And you've seen this, everyone's written about it and everyone's added thoughts to it, but the fundamental issues, there's not as many people downtown spending as much, staying as long. And the things that we took as givens, use of public transit, quality of public transit, services and amenities in downtowns, all of those things are now shaken. Like we talked about and you asked earlier about retail. Well, we've got to make the retail interesting. We've got to make the designs interesting, the facades interesting. And we've got to make things Instagrammable. People want to come there. They think it's exciting. I'm a big fan of trying to do things like temporary pop-ups. Those are fabulous. But we have to work on revitalizing downtowns. There's going to be some carnage. Some of the buildings aren't going to work out well for a long time. And conversion isn't going to be the answer for everything because we've looked at it 10 different ways and it's very, very challenging to convert the use of office. I would say that Boston, New York, other major cities probably have a shorter path to coming back. And you're already seeing it in Boston and New York. Cities like Charlotte, we have a lot of uptown. They call downtown uptown, but their central business district has a lot of big office buildings, so that aren't super well suited to renovation. So that's going to require cooperation from the public sector. It's going to require policy changes, incentives, regulatory changes. I mean, listen, Paul, we've got to make it easier to build. If we can make it easier to build, our pre-development time is shorter, our financing burden gets shorter. That's an easy one that I think should happen. But I can tell you the biggest issue for workers that I hear in urban areas downtown is traffic. So more people are driving in cars now, less people are walking or taking transit, I should say. We've got to make transit safe. We've got to make transit reliable, but we need a lot of infrastructure investment. I'll say one last thing. I'll speak to Nashville. Nashville just passed a transportation bill that will add bus rapid transit to many different corridors in the city. And I'm extremely optimistic that Nashville's continued investment in infrastructure is a great blueprint for the future. So I would say look at what Nashville's doing, and that's potentially a model going forward. We have to sell the urban lifestyle again. Like, it's not a given that everyone wants to do it. So we've got to do a good job of selling it, which means selling the benefits of it and making it as frictionless as possible for people who have reservations. Affordability is one thing that's another podcast, right? But all we've got to do is let's just start with the easy stuff, amenities and transportation. Let's start with that. So I think that we can make baby steps in 25.
Great. Well, Mike, now we come to probably my favorite segment of Investment Matters, which we like to call Executives Off the Clock. Commercial real estate is a time-intensive business, as you know, as well as anybody, but we can't always be working 24/7. So when it is time for you to take a break, do you have any favorite ways to step away for a little bit and try and recharge?
My my girlfriend got me to go to Italy this year, which was
Oh, nice.
I would never have taken the time off. I loved it. But for me, it's in the nice weather, boating. I grew up on the water. That's a way that Dad and I bonded and still do. Whether it's fishing or we're in Cape Cod, so ripping over to Nantucket Island or the Vineyard. Um, love being on the water. I'm starting to get a little bit better at golf. I really like golf. I'm like a 9-hole guy. I think 18's
Mhm.
a little bit much for me, but I enjoy that and I enjoy it because I get to see folks outside of work. I got to tell you, though, Paul, it's I when I took over as CEO and took over and bought the company, you feel you're responsible for everything at every moment. So you're always afraid, as an owner or founder that at any given time when you're not there, and Joe says this, that things will fall apart. So you almost have this fear of you wanting to be around. So I'm always accessible. The great thing that we've done is I've started to build a really good team. And as you build the great team, it's not just the hub and spoke model of Dad with just a few other people around him. Now we have an infrastructure, which allows me to do things like this weekend. I'll shoot up to Vermont with my girlfriend Kelly, and and that'll be a great way to turn off. I'll say that one other thing I want to touch on is working with your dad. Um, People talk about separating work life, and I have a very strong opinion that doesn't happen, and I don't think it should, because
Hmm.
Dad and I are going to be talking business and social and family all at the same time, and because that's what we do and that's what we are, and it's not like there needs to be some dividing line. In fact, if I told Dad that I didn't want to talk about business today, like he's pretty old school. He might not respond well to that. So I have to learn maybe to function. I don't expect all of that from other people, but I do for senior leaders. I think they feel that responsibility to be at least accessible. Um, I will tell you one last thing that I've done that's really helped is I have a second phone now that I call the bat phone. And the bat
The bat
phone is
phone.
only a few people have it, and it doesn't have my email on it or Instagram or any of that. So it's really only text and incoming and outgoing. So I'll use that in times when I want to try to wind down.
Mhm, mhm. Yeah, it sounds like a real handy dandy device to try to accomplish that at times. It's a
You should get it's great.
simple but effective, right?
Yeah.
Well, that's great. Well, Mike, I really appreciate you taking the time to visit today. Enjoyed hearing about everything that you're doing at the company and the initiatives that you've got out there. So good talking with you.
Thank you for taking the interest, and I appreciate you sharing your platform with us today.
That was my conversation with Mike Fallon, CEO of the Fallon Company. Before you go, let me tell you about an exciting opportunity. The CPE Executive Council is a group of industry leaders who exchange ideas about trending real estate issues. Highlights of their discussions are posted on our website and featured in our newsletters. If you're interested in joining the council, please contact CPE's editor-in-chief, Jessica Fear, at jessica.fear@cpe-mhn.com. Once again, that's jessica.fiur at cpe-mhn.com. Please join me next time for another conversation with a leading commercial real estate investment executive. You can find archived episodes of Investment Matters and more CPE podcasts on Apple Podcasts and on our website, commercialsearch.com. Until next time, thanks for listening and be well.